Hi, good morning, everybody. It is my privilege to be moderating this session. We have with us, of course, Dr. Veerinderjeet Singh, who is the chairman of the Ethics Centers Board, and of course, Man Yew, who recently just now gave us a very good overview of the announcements on relating to tax planning. So I hope that before I start to engage our panelists, I would like to also encourage all our participants and members to actually go and read the standard, right? So it's actually roughly about 29 pages actually of the new pronouncements. So it does, nothing I think is replaces the reading of the standard themselves. So that when you read it, but hopefully through the overall overview of the, some of the pronouncements you are able then to then focus on certain areas that you may be interested in. So, of course, my job today is then to pull out some of the salient features of the standards and also then to also discuss some practical applications. Okay, so firstly, of course, this question to Dr. V, Chairman. Prior to the release of the final standard, you were engaged to attend a roundtable discussion relating to the development of this tax planning exposure draft. At that stage, it was exposure draft stage. Can you share some light into the motivation behind, the work at the international level and how this would address the global challenges in tax planning and related services?
Yes, thanks, Simon. I trust there was the coverage just now by Man Yew and also by Yifang was at least a good overview. Now, this particular aspect of tax planning and related services and pronouncements, basically what happened was that ISBA formed a task force, and during this fact-finding phase of the project that they had, they engaged a number of stakeholders. And as Simon has pointed out, I was one of those who was involved to look at, in particular, the issues about professional accountants providing various tax services. And they were focusing quite a bit initially on transfer pricing services, because that was transfer pricing is a very close link to accounting, financial as well. Remember about pricing and so on, which really impacts immediately your bottom line. So the other issue why the ISBA wanted to look into this was something that Man Yew did touch on when he first introduced the topic today, was this issue about public concerns. The public concerns about whether tax advisors or whether multinationals or large companies in particular have been overstepping certain boundaries. The boundaries here are very gray, by the way. There's no black and white line. A lot of things are judgmental, right? So the concern was whether there has been the role of tax advisors in assisting wealthy individuals, large corporations to avoid tax. And this became more prominent when, as some of us know, there were some high-profile developments in terms of exposures. And this is things like the Panama Papers, the Paradise Papers, the Pandora Papers and the leaks. And coincidentally, everything starts with the letter P, all right? All the names. So these were investigative journalists who managed to get hold of a lot of data from various legal firms and so on and released it out. And this pointed out a number of rich individuals, large multinationals had lots of companies set up in what they call low tax jurisdictions. Now, I must point out very clearly, having an entity in a low tax jurisdiction doesn't mean that you are doing something illegal, all right? So the point that was raised here was that sometimes some individuals or companies may set up certain entities in low tax jurisdictions, and then the question is what is being channeled through those low entities, the low tax jurisdictions. And sometimes it's about trying to hide your money there when it should have been reported in your home country and so on and so forth. So whatever said and done, tax has become now an international topic, all right? And tax has become something that is in the public eye. and public focus. So the ISBA felt it was the right time to come up with some kind of guidance, because their perceptions were that, in particular, multinationals were very aggressive. They were employing sophisticated transfer pricing strategies to minimize their taxes. And so the question always is about, okay, it's within the law. The law allows you to do this, but have you looked at it, taken a step back and decided whether there's an ethical element to all this? All right, ethical element is the concept of morality coming into the picture. So this was the background which resulted in ISBA having the task force, doing fact-finding, having some engagements before they decided that there is grounds, adequate grounds, to have this kind of a pronouncement. And so this, remember, it's a strong, this also coincided with these issues about ESG and sustainability focus all coming into the picture. And many of us know about this focus on sustainability, ESG. Even in Malaysia, many countries are moving the direction. Now that also exposed a number of companies in terms of what are they sharing, what are they doing, are they being aggressive about some of the data they are reporting. It may not be accurate. There's this element of what they call greenwashing and so on. So lots of standards are coming up and have come up, and lots of practices have developed, but are they acceptable? Are they logical? Are they ethical? And all comes into the picture. So when you look at ESG in particular, and in fact, when you look at tax transparency, we all know about, I think, the GRI. The GRI is the standards that were issued some time ago, by the way. And just for the benefit of listeners and for today's webinar, there's also a GRI 207, which you may want to look at on taxation, which talks about sharing more in terms of your annual reports, public information on tax, all right? So this standard, therefore, that ISBA has now announced and we have adopted in Malaysia is actually a response, reflects a proactive response to stakeholder requests, to the challenges that we've had, to the issues of public trust that has arisen, all right? And therefore, this is a clear step to strengthen ethical guidance for public accountants, and also to ensure that our tax planning services are aligned not only with legal requirements, but also with public expectations. Now, but at the end of the day, we must all remember that we just need to follow the law, but we also need to make sure, are we doing something overly aggressive? Is it stepping at certain boundaries? Can you, if you were in the same place, running the same business, would you be doing what you are suggesting to others to do? So it's a step back situation. So that's a quick background, Simon, in terms of what ISBA has done and what are the motivation, and this is and why they are addressing this. And therefore, as you know, in many other sessions that MIA has held, there were separate sessions we've held on tax governance, and I've spoken quite a lot about tax governance, and it has become now a very, very important focus as one of the many steps that a company should undertake to make sure we're doing things rightly and correctly, and with a clear mind that this is logical and can be defended when the time comes. So that's a quick background, Simon. Thank you.
Thank you, Dr. Lee, for that very enlightening background, and also the fact that you mentioned about the looking at, in addition to compliance laws and regulation, there's also a need to step back to consider the ethical side of it, right? And I think you touch on tax governance, which is an area that I would like to then engage both Man Yew and yourself next. So we saw in the in Man Yew's presentation, you mentioned about ethical issues around tax planning, and also the regulatory landscape, right? Particularly in relation to the ethics standards and how they have been enhanced. So now the question is that practically, how would firms and organizations manage their tax-related activities while being accountable to the public interest? Now there's this element consideration of public interest. So what would be good governance, right, over tax planning and similar activities going forward? And perhaps you can share what would be practical for organizations to do in terms of their governance over the tax planning in light of this new ethical framework.
Do you want Manu to
maybe
start?
first?
Yeah.
Yeah, with Manu first, and then Dr. V.
Yeah.
Okay, thank you very much. So maybe what I can share is that the IRB actually they have issued this they call it tax corporate governance framework. So what it says that there's some outlining the best practices for tax governance, emphasizing internal control and risk management. So organizations should actually develop and implement a very comprehensive governance tax framework, following this as a guide. And it will be good that this can be followed, so that when the tax authorities look at it, that you actually follow their tax corporate governance framework, and then it will be they will think that this is in line with their policies and all those. So that is one point I can share. Yeah.
Thanks, Manu. Dr. V, anything to add?
Just to follow up on what Manu has stated, and I think what we are saying here is that the IRB, the Inland Revenue Board, has got this tax corporate governance framework. Now, we are not propagating that as a company you become apply to join the particular framework and apply to the IRB. What we are saying is the IRB has issued various guidelines talking about tax corporate governance, talking about the controls, and giving certain criteria and steps that you can undertake. So to me, at the end of the day, why don't you look at that, use that as a template, and then use it in your organization, set up your so-called controls, prepare your documents or SOPs governing tax and how you manage a tax function. And we must remember that in many organizations, I think, we think we know it all. We think we are doing it well. We think it's there. But sometimes you rely on individuals, on your team of staff, and staff changes, right? Staff move on. And then new staff coming in need to be given some kind of an update and a handover. And sometimes handovers are not done, right? So if you have a document which stipulates line by line the various roles and responsibilities in terms of the tax function, who approves it, and then what's your clear principles that you follow. For example, sometimes you can also develop a tax risk statement if you want to, and really outlining your approach, your organization's approach to taxation, and then stipulating the controls, the roles, responsibilities, who approves, and all that stuff. So that someone who looks at it will have some comfort that there is a process, in a documented process. And as Manu has pointed out, that in the case of tax audit sometimes, and I know in the future, we may have a situation where this tax corporate governance framework might well become mandatory way down the road, not immediately, right? But perhaps for SMEs, it may be a watered down version, a smaller requirement in terms of all the various things you need to do, but it may well be mandatory. And it is good because this is all about documentation, proper governance, and also governance here means that your board may also need to be involved, board of directors, and in particular the audit committee, some reporting of your tax function. So that's what it is all about. And if you have this clearly documented and you're following this, by the way, documentation is not enough. You must be actually implementing this effectively. And the auditors from the IRB may well be influenced by this, in the sense that, look, you have some good internal controls, and that may give you, you may be looked at by the IRB favorably, that there may be some mistakes, but you have done it well. So I think we have some internal controls. So that might be good for you in the future in the phase of audit. So I think that's what it is all about in terms of good governance in the area of taxation. And also good to stipulate in the SOP that you are in compliance with perhaps even the ethical requirements that the ISBA talks about. We do what we think is within the law and within the right aspects. So we do not perhaps take aggressive views. You may want to seek views from the IRB as well. Sometimes the IRB gives some guidance. You may want to go for tax rulings if you think you want to. You also go for opinions from your tax advisors. All this can be documented. And therefore, it shows that you take, as an entity, you are taking proper steps to ensure that whatever is the issue at hand is managed properly. So I think that's what I can say to what Mun Yew has already stated. Yeah.
Thanks, Dr. V. Okay, now to a practical application on one of the points that was raised just now in the presentation, was the credible basis for providing tax planning advice. And then there is also this informally known, task of stand back, having a stand back test, and also looking at the broader reputational, commercial, and economic consequences that may arise from a particular piece of tax planning advice, right? So practically, how can you give some practical examples of how this might be applied in real life or real world scenarios? Mun Yew, perhaps to share, in what sense in the context of tax planning services?
Yeah, okay. Thank you, Simon. Okay, maybe for this one, maybe I just talk about, just as spoken very briefly about this credible basis. So maybe I go into slightly more in depth. So first point, of course, we need to understand the relevant law and regulations. So this is the basis of providing the tax services. If we don't have a basis, then a bit difficult. So what we need to know is that we actually need to know what are the laws governing whatever advice that we are giving, and make sure that we understand all the anti-avoidance provisions and other relevant legal requirements, so that the advice given will not be in breach of any tax laws and all those. Of course, the next one will be, we have to conduct a very thorough research. So make sure that we are covering all areas whereby the supporting the tax advice. It's not just giving an advice and nothing to fall back. So it's like, how's when it's being challenged, do we have a basis of what we are saying? So those are things. And if for this research, we also cover like tax laws, tax rulings, various types of guidelines, even any area, even the practice of the IRBs that we can use as a basis. As long as we have a basis, even though the tax authorities may challenge us, we can stand on those. And it is even sometimes, for example, like the dialogues or even the minutes of discussion of the IRB between the let's say MIA and the IRB, it can also be used, and they will take note. They say, oh, we have agreed in the past that this thing should be done. I mean, the tax treatment should be done in such a way. They will actually honor that tax treatment. So these are the good basis. And most importantly is also we need to document all these bases, because sometimes when we do certain tax planning advice and all those, you may be doing it now, but as you know that the time bar of the IRB raising assessment, it will go up to 5 years for the normal corporate tax, the normal tax, and transfer pricing, maybe we go 7 years. So by the time when the IRB actually raise the issues and having some dispute, time may have passed, and like Dr. Veerinder said that staff may have moved on. So, but if you document it properly, we can actually refer it in the future, maybe in time to come. For 5 years, by then we may not remember what we have done in details. So if you ask me what I've eaten for lunch 1 week ago, I also cannot remember. So documentation is important. And having said that, you also need to consider the ethical standards when we have all these tax planning and all those balancing with the public interest, and make sure that these credible basis they do not harm the public trust and harm the corporate reputation of the organizations. So that is a very big picture of the credible basis. What about the stand back test? So I highlighted slightly also, very briefly just now, but some of the areas that we can cover, like we need to look at the reputational impact of this tax planning advice to the organization. How does it affect the public and stakeholders? So this is in short, like what happened if the tax advice suddenly some like the Dr. Veerinder said, that investigative journalists suddenly they go and publish everything out, and what will be the reaction to the public? So this is one of those tests that we need to consider. If it's can withstand the public opinion and all those, then it will be good. Then there's also these commercial consequences if we have this tax planning. How does it impact the organization in terms of although we may have savings, because tax planning usually taxpayers talk about savings and all those. So savings is one thing. But will it lead to further litigation or even challenges or disputes in the future? So it may, if you have those, so you take a very aggressive, this thing may happen and it will give a very not so good light to the organizations. And the other thing is, the point is that, what about the economic implications to the jurisdiction whereby the entities are operating? So are we trying to shifting the revenue to another jurisdiction? So these are all the considerations whereby we need to take into account. Yeah, maybe that I pass back to Simon. Yeah.
Thank you, Mun Yew. Yeah, I think quite a lot of points there to take away.
Maybe
Hopefully,
Simon, if I may interject. If I may interject, just following on from Mun Yew's explanation. The point here also is this: when you look at his last point on the economic implications, because of what we mentioned earlier, what's happened internationally, governments have started to try to protect their tax base. That means the country's base, and trying to raise as much tax revenue as possible, right? So therefore, they may pick up a particular entity or individual and do some kind of audit or investigation with the view that they may have a view that something that should have been taxed here somehow has been moved to another place or is reported in another place, when rightfully it should be a Malaysian source, right? And therefore Malaysia should have the right to tax. This kind of challenges are going to be quite relevant from now onwards, because every government is looking at trying to build their reserves and their tax revenue base. So the challenge, but in the end of the day, we welcome such challenges, right? Because at the end of the day, if I am a consultant who is worth the bill that I charge my clients, I should be able to defend. I should be able to document the rationale why this was reported elsewhere or moved to another place, and so on and so on. So it's all about documentation, and it's all about being able to defend yourself in the event of an audit by the tax authorities. And you defend yourself because you have the law, you've analyzed the law. Sometimes you've analyzed different countries' rules and regulations as well, case law as well, and you've taken a considered view. And this is what the ethical background and underpinnings are all about. That I also taken a step back and I looked at it. What would another person looking at this, let's say another advisor, would that advisor come out with some kind of a similar view? And sometimes in very large transactions, large situations, you may have within your own firm of advisors, you may look at your other tax partners and get their view as well of a particular transaction. So that's always a validation that you need to do when you are in practice. And sometimes it's good to have others looking at it as well. And that's part of the reason why we talk about a stand back test. Always take another step back and look at it again, hopefully fresh eyes, and see how does it still remain the same finding that you or opinion that you have already expressed. So that's really what one should do. But I know the follow-up question that any member listening in will say, oh, this will end up as spending a lot of time. Reality of life. Perhaps AI helps in some ways, but in the end of the day, judgment is a human thing. And so I think time will have to be spent because you are defending your client, you are protecting your client, you're standing up to say, I'm giving you advice and I'm worth it, right? So you must be able to spend the time to do the relevant analysis and defend your particular client as well. Thank you.
Yeah. Okay. Thank you, Dr. V. But I have a follow-up question.
Sure.
And also just to bear in mind that some of these areas, tax planning also involve the PAIB side. The PAIBs also need to consider all the several principles that we talked about, all right? The professional accountants in business. So one of the points that in the quote, it says that there could be situations where there are uncertainty, right? Or we call it a gray zone. And I think Mun Yew shared that earlier on. And so generally, gray zones could be an area where there is ambiguity. It's not very clear in terms of compliance with the tax planning arrangement, with relevant laws and regulations. And there could be some disagreements or differences in views in whether it could be in the employer organization or the advisor could be have a different view with the client. So generally, how do we navigate such situations, Dr. V, in your professional experience? Perhaps you can share with us how do we deal with such disagreements with the client or with the employers based on tax planning advice?
Yeah. So just take one step back to what you just said. In an entity, you have a CFO. You may have a person heading the tax function. Now, a CFO and let's say the tax director or tax manager in an entity have got a role. And it is you engage an advisor and saying that the advisor has advised me and I just follow the advice and he is responsible is not enough, all right? You and the entity itself also have a role and function. So those PAIBs will also need to make sure that they have covered themselves. And therefore the issue is, and from an advisor's point of view, I will always want to share with my client my thinking, thought process, my decision, and do you agree with it? Please, and open to any questions, explanations. So discussion with your clients, the PIBs, is essential. Now, in the past, I think I've seen in my own experiences that most of the PIBs just accept whatever is given, document, follow through. They think they are the experts, the others are experts, and that's it, nothing else to do. I think the ethical framework does say that you also need to take a look at this. Now, if there is a disagreement, for example, as an advisor, I'm giving you a particular path, that this is how I think you should do it. The client feels that I don't want to do that. Then the client has to document the reason why they disagree with the opinion and document what they're going to do. And if in most cases, if the client insists that I want to do it this way and I'm going to file a tax return in that manner, then the tax advisor has to take a step back and see whether the tax advisor can live with that decision, analyze it. Is it possible that that particular view by the PIB is defensible? If so, then fine. If not, then there is a view whereby the advisor can say, I'm sorry, I'm not able to file the tax return. You may have to file it yourself because I disagree with the view that you've taken. And therefore, as a company, you file the tax return on your basis and you defend yourself. That's an extreme situation. In most cases, we discuss it out. So in the end of the day, this disagreement is a discussion. It's understanding each views, coming to a conclusion, documenting it. And if there is a disagreement, you document it accordingly and then leave it to the company to decide the next course of action. Worst case scenario, you may want to take it up to the audit committee and make a presentation and see how, and get that some validation from the audit committee and so on and so forth. So you have some layers that you have to go into in terms of getting validation. It is not one person making the decision, but that's how you should be managing any conflicts where to the extent possible. And the worst case scenario is if it's impossible to agree, then the advisor may have to take a step back and say, I'm not going to file the tax return. I leave it to the company to do so. That's the extreme end. So these are steps that one should consider in due course. I'm not saying there are many disagreements. Usually there are not that many, but in the end, talking it out, understanding each other's rationale, looking at the law, and then having a logical discussion, you usually come to a situation that is satisfactory to both, and you move forward. So again, discussion, review, documentation.
Okay, thank you, Dr. V. So perhaps maybe Dr. V can share with us what should boards keep in mind when granting pre-concurrence for non-audit services provided by the audit firms to a PIE client especially, and how should those charged with governance navigate potential conflicts of interest when evaluating these proposals?
Yeah, so I think the main thing in this, first of all, an entity, a company, PIE for this example, would have their own internal policy in terms of appointment of external auditors, and those policies will stipulate the term, when do you need to do another request bids for change or whatever of the auditors, every 5 years, every 10 years, whatever. They also talk about rotation of the partners and so on. Then it will also have something there which talks about non-assurance services. It should have a documented policy, and the few boards that I am involved in and chaired as a chair of audit committee, we have a policy established. And in that policy, you also talk about non-assurance services. And the question is, I've seen extremes, all right? There are multinationals who say that if you're an external auditor, then we are not able to offer you, and you cannot take on any non-assurance services. But then you have others which says you can. And the question is setting out the guidance. And in some companies, what you have is you have a limit in terms of, let's say, 25% of the total audit fees of the year. That's the amount of non-assurance services, that fees or value they can get. The point is, documented policy is important. Who then is the one which may give an exception? It is usually the audit committee. So they are the ones then who will have to consider if there's a special situation. And I've been faced with this in some of my boards as well. In a policy, there's always some exclusion to say that exceptional situations, you bring it forward to the audit committee, let the audit committee decide by putting all the facts. For example, you may cross the 25, let's say your barrier is 25% of total audit fees for non-assurance, you may cross that. And you then put it forward to the audit committee to give a decision or exception by justifying what it is. So management justifies, audit committee looks at it. Look, if it's something that is doable and we think that firm has the best expertise in this area, then the audit committee will exercise its due discretion and so on, and they'll give the exception. So the process has to be in place. And first, a policy, Secondly, then if you have exceptions, you bring it up to the audit committee. And in extreme situations, you may want the whole board to also endorse whatever decision that the audit committee has taken. So that's how we will need to do our process that we need to follow in terms of making sure that we have complied and exercised our judgment effectively.
Thank you, Dr. V. Yeah, I think we have come to the end of our session. Perhaps then maybe just a wrap up, maybe key reminders or key takeaways that you would like to share very succinctly within 1 minute each. Maybe Manu and then Dr. V to end. Any key takeaways you would like to share with our participants?
Okay, maybe I can share first. So now in the past where we have this, you say that in tax, morality is not to be considered, but that view is already not valid today. So now we actually have we need to look at ethical issues in terms of even the tax planning advice that we are giving. So this is really a good corporate governance, and we need to follow this so that overall we look at it like this is the way moving forward for tax planning services. And instead of just looking at the legality of the savings, so that's what I have.
Yeah.
Thank you, Manu. Dr. V.
My short one is simply this: from the point of view of the corporate sector, companies which are engaging advisors and so on, the policies need to be clearly documented, and they need to make sure that due judgment is made in terms of appointing auditors for non-assurance services and so on. So though that governance is set up now, Manu is talking about the governance in terms of tax governance, but governance, of course, is much broader. So in fact, your financial function has to be also managed well. You need to have governance in terms of the audit committee's role, and you also need to look at governance in terms of appointment of advisors. And it's particularly when external auditors are also doing non-assurance services, that criteria is very important. So I think it's time that corporations have their policies in place so that they are they exercise due care in going forward. Yeah.
Thank you, Dr. V. Thank you to the panelists. It has been my honor to engage both of you today. And please, all our participants, do give them a big round of applause.